Good morning, you're watching Market Cafe on ET Now with me, Somit Sarkar, and my co-anchor, Ankita Saxena. So starting off with the US markets after the holiday period, how did the US markets fare in trade yesterday?
Yes, Somit. So after this holiday break, US markets closed mixed now as the bond yields rose, and also the investors are now weighing in on the outlook for 2023. The Dow Jones Industrial Average rose 37 points or was up 11 tenths of a percent. The S&P 500 fell 4 tenths of a percent, while the Nasdaq Composite shed almost 1.5% in trade. Now, Apple stock was amongst the worst performers in the Dow, falling to the levels not seen since June 2021, closing at almost 1.5% lower. Now, look at the Chinese-linked stocks. They advanced as the country has, as we all know, has loosened its COVID restrictions. So, on the back of that, all the Chinese-linked stocks were doing well. Tesla was in focus. Tesla dropped more than 11% on the news of an extended production pause, as Tesla has paused production in Shanghai's factory due to rising COVID-19 cases. So the stock saw a drop of more than 11%. With the stock, it is probably going to be the worst year ever for Tesla after yesterday's fall. Now, look at the bond yields. Bond yields pushed higher. That put a lot of pressure on the growth stocks like technology. The yield on the 10-year Treasury note was up nearly 11 basis points to trade at 3.8%. Now, look at the stock market, US stock market. It is on track for its worst year since 2008. Now, investors really are looking forward today towards the manufacturing data from the Richmond Federal Reserve and the pending home sales. So that is something that the US investors, the investors all over, are really will be looking out for in today's trade. Now, let's move on to the European markets. European markets were bucking the trend and moved higher on Tuesday, as you know, there's some positive sentiment that's trickled in on the back of coming new year. The DAX was up 0.3%, CAC added the 0.7%, and FTSE was closed on Tuesday due to a public holiday. So that was the global roundup from US and European markets. Swami, take us through how's crude faring?
When it comes to crude oil prices, they have been steady in yesterday's trade, but this was after hitting a 3-week high on Tuesday, and this was on the back of the fact that there are now mixed cues coming in for crude. Specifically, if you see on the US side, the plants have restarted their operations because earlier they were shut because of the winter storms, but now they have started operations, and refining units have also started operations, which have led to more output coming in. And on the other side, on the positive side, if you see, there's hopes of demand recovery coming in from China because they have eased their COVID-19 restrictions. So there were mixed cues coming in for Brent crude, and largely they have remained stable. When it comes to gas prices, there are a lot of actions we have seen when it comes to gas. Firstly, in yesterday's trade, gas was hitting high because of a brutal winter, which had increased the gas demand. But then in today's trade, if you see, gas prices are down around 3.5%, and this is of a warmer weather outlook that is coming in the US market, specifically in the first week of Jan, that has been weighing on the prices. Along with this, if you see the Freeport LNG, which was earlier impacted, there was some disruptions, and there are now news reports coming in that that this port restart might get a bit delayed, which would lead to more gas stocks in the country. And because of both these factors, if you see in US market, the gas prices are weighing down around 3.5%. In the European market, if you see the title transfer facility, that is the benchmark of gas prices there, now they also trended lower because of milder weather expectations going forward. Warmer weather would lead to a lower gas usage. Along with this, if you see, the gas storage is also largely stable in the European region at around 83%, which is unchanged from the last week and is at the highest in the last 5 years. Because of both these factors, in a European market also, if you see, the gas prices trended lower. However, in the Asian market, the gas prices remain largely stable. There was not much of a movement coming in. And lastly, when it comes to gold prices jumped to the highest level in the last 6 months on Tuesday because of the optimism coming in from the China's further easing of COVID-19 restrictions. Along with this, if you see the dollar index, now that also trended lower. However, the benchmark 10-year yields in the US market were its highest level in the last 1 year. Now, the spot gold prices jumped to around $1,833 per ounce. This is the highest level that we have seen since June 27.
Right, and moving on to China. China will start issuing new passports and Hong Kong travel permits to mainland residents. The country is removing some of the tourism barriers from 3 years of strict COVID restrictions. Foreigners can also apply to extend or renew their visas. Some of these measures will kick in from January 8th. Now we have what does this China reopening mean for the world and especially for India? We have Shrishti joining us to explain this.
So all throughout 2022, we were facing some kind of a news flow on a negative side that the China and that economy is somewhat slowing down, especially post-COVID. But towards the end of 2022, we are hearing some positive news flow coming out there where the country is actually now relaxing their zero COVID policy, and not just that, also seem to be opening up their borders for the international travel. So the point is that will this trigger a revenge demand for not just Chinese economy but also for the world over? So let's try and understand that. But firstly, what does this mean for China? So this will definitely boost the economic activity and could also re-rate the Chinese market in a major way, because if you see, then China is the #1 in terms of total exports and #2 in terms of total imports. This will also rekindle the fund flows into the Chinese market and also ease out the global supply chain issues. But back in India, which are the sectors that are in focus? So let's understand that. First of all, definitely it has to be the metal pack. The kind of shine that you are seeing in all of those metal counters clearly define that rally, because the global metal prices can see some spike with Chinese economy opening up. But on the other hand, the local prices of the steel may fall due to the cheaper imports from China. So it has to be seen on the both end, but the strong push in the graphite electrode prices, that is positive for the companies like HEG and Graphite India. Other than that, the focus is on electronic components, because 40 to 70% of the components come from China, and that is actually positive for counters like Adani, Amber Enterprise, Dixon Tech, as well as some of their air conditioner companies as well. Next up, the sector in focus is API and the pharma theme, because India is one of the largest importer and have a lot of dependency on the Chinese market. So Indian pharma companies have worked on increasing their domestic production, but other than that, all of these, this sector is also in focus. Another space that is in focus is chemical space, because Indian specialty chemicals is to be impacted because China is still seeing some closure of the chemical plant due to their stricter norms. So that is a mild negative for some of these chemical companies. And lastly, where the business outsourcing has shifted to India with the Chinese economy opening up, companies like Apple, Samsung and Amazon, these need to be tracked closely for their future plans, where they are eyeing and spotting for their growth opportunities, whether it's India or China. So we'll be keeping an eye out on that.
Well, moving on, Taiwan has decided to extend compulsory military service to 1 year from 4 months from 2024. Now, the move comes as China has in recent months ramped up pressure on Taiwan, both economically and militarily. Now, President Ing-wen said Taiwan wants peace, but her country also believes in democracy. Now, we also spoke to Professor Shrikant Kondapalli, the Dean of International Studies, JNU. Listen in as he helps us decode what this actually means.
If the Chinese are prepared like the Russians did in Ukraine, we also saw Russians began the war in Ukraine on February 24. We are still not at the end of the war. So one of the lessons the Chinese are looking at is, number one, there is 180 nautical mile difference between China and Taiwan. Unlike Donbass and other areas, the Taiwan Strait also has a huge water body that needs to be crossed if they have to take a military action. This is quite a problematic for China. Number two, Taiwan is not like Ukraine. Taiwan is highly industrialized. 40% of global hardware is produced in Taiwan. And the Chungshan Institute of Science and Technology, which is something like our DRDO, has developed Xiongfang missile systems, which can hit many portions of China, creating havoc for the Chinese if they invade Taiwan. So it is nearly impossible for China to undertake this mission in invading Taiwan.
Moving on, winter has wreaked havoc across the globe with extreme cold and snowstorms bringing life to a standstill in several parts of the US and Canada. In fact, New York is witnessing its worst winter storm in 45 years. Reports suggest that this could be the culmination of an Arctic freeze and winter storm front put together. The death toll has climbed to 35. In New England, in fact, warm banks have opened up to help people battle this freezing cold.
Well, the Southwest Airlines came under fire from the US government after the low-cost carrier kept cancelling flights. Now, harsh winter weather grounded planes and disrupted holiday travels. Now, the airline cancelled thousands of flights as an Arctic blast and a massive winter storm swept over much of the country over the Christmas holiday weekend.
And Russia's budget deficit could be wider than planned, 2% of GDP in 2023, as an oil price cap squeezes export income. The country's finance minister Anton Siluanov said this is an extra fiscal hurdle for the country. His comments represented Moscow's clearest acknowledgement yet that the $60 per barrel cap would hit the state finances.
Well, President Vladimir Putin delivered Russia's long-awaited response to the price cap. Now, Kremlin would not export oil to countries that imposed the price cap. Now, the ban kicks in from the 1st of February for 5 months. Now, the decree also includes a clause that allows for Putin to overrule the ban in special cases.
And FTX customers filed a case action lawsuit against the failed crypto exchange and its former top executives, including Sam Bankman-Fried. It seeks a declaration that the company's holding of digital assets belong to the customers. The lawsuit is the latest legal effort to lay claim to the dwindling assets of FTX.
Well, the year gone by wasn't too kind to Indian startups either. Listings and valuations both have massively dropped this year compared to the numerous unicorns that were minted previously. Now let's rewind and take a look at how the year turned out for the startups in 2022, and we have Sharad joining us with all those details.
The year 2022 has been a muted year for startups, be it layoffs, be it funding erosion coming in, and also there is a markdown happening in the valuations of the companies. Now, just looking ahead up to Series D, almost 20 to 50% valuation cut has been there, and this has been always across the IPO bound startups as well, and we have been having chats with VCs and industry experts. Apart from this, also the Indian startup funding, that number has fallen more than 30%, and this is on a year-on-year basis as we compare it with 2021. Even the number of funding rounds, that has also fallen, and you can say that has also fallen almost 32% on a year-on-year basis. Now, overall, you see, that's the fall we are seeing for the Indian startups of the funding. Apart from this, the startup IPOs, which is expected to come in 2022, that is expected to come in almost 3, and last year itself we saw almost 9 startups being listed. So of course the IPO action in the startup space, that has come down. But what the IPO action is expected to come next year, that is something which we'll be watching out for. And of course the big name coming in from, that is OYO, that will be almost a 7,000 crore IPO, followed by big names such as Navitek as well as Payment, which are expected to hit the bourses next year. Apart from this, there has been major startups shutting shop, and that is something which we like to ponder upon, especially the Indian startups, and majority of the Indian startups, especially in the edtech space. Over here in this list, almost 5 of these companies are actually in the edtech space which have shut shop. Now let's look at the global numbers. Of course, the fiasco coming in from the crypto space, being FTX also being one of the prime contenders where the global startups have shut their shop. And apart from this, there is Airlift, there is Argo. All these companies have also shut their shop in the global numbers. But let's look at the key trends going ahead for 2023 for the startups. And of course, the main focus is moving from growth to profitability as startups are actually reducing their cash burn, and the focus would be there in the debt funding which will coming in for the growth stage startups, and also layoffs are expected to continue. And lastly, the most important thing is there is going to be a focus on restructuring, and also consolidation would be there for the bigger players.
Well, it does look like the start of a funding winter. With that, it's time for us to slip into a short break. You don't go anywhere. There's lots more news coming up on the domestic front. Welcome back. You're watching Market Cafe. Let's quickly move on to some news coming in on the domestic front. Nifty PSU Bank gained more than 60% in 2022. Now, that's a big return by any measure. But the question is on everyone's mind is whether the rally would continue in 2023. Now, RBI has released a report which shed some light on banking performance in 2022 and the outlook for 2023. My colleague Ankur Mishra has all the details. Let's go across to him.
Yes, in the latest report on trends and progress of banking in India, it is said that consolidated balance sheet of banks saw a double-digit growth in 2022. Apart from that, the bank's profitability has been mitigated to some extent due to increase in the limit of SLR securities. Apart from that, as far as the asset quality of banks are concerned, that has shown a huge improvement till March 2022. The gross NPAs of the banks declined to 5.8% till March 2022 compared to 7.3% last year. If you talk about current numbers till Q2 FY 2023, that is till September this year, gross NPAs of banks have declined to the extent of 5%. Apart from that, if you talk about sector-wise, the public sector banks NPAs declined to 7.3% versus 9.1% last year. Similarly, private banks NPAs declined to 3.8% compared to 4.8% last year. If you talk of recoveries of NPAs, that has also shown a huge improvement with this year recovery reaching to rupees 89,661 crore compared to around 64,000 crore recovery this year. And a major contribution has been through IBC in the recovery with 47,421 crore coming through IBC compared to only 27,311 which was recovered last year through IBC.
Well, moving on from banks to steel. Now, the budget 2023 is soon approaching and the steel sector may get relief in the upcoming budget. ET now has learned from sources that government may remove the basic custom duty on manganese and chrome ores. Now, my colleague Prakash Priyadarshi filed this report earlier, so listen into it.
Yes, we are getting from our sources that the steel sector may get some relief in the forthcoming union budget. Sources are informing that the government may remove basic custom duty on some of the important raw materials like manganese and chrome ores. Currently, 2.5% basic custom duty is being levied on these important minerals. Sources have also informed that the Steel Ministry has sent this proposal to the Finance Ministry, and abolition of basic custom duty on these important raw materials may help in reviving some steel plants, which is facing financial crunch due to unavailability of sufficient raw material in domestic market. As you are aware, India had just 1% of total world's total chrome reserves. Apart from that, Steel Ministry has also sent a proposal to the Finance Ministry for inclusion of steel sector into RoDTEP scheme. RoDTEP is remission of duties and taxes on exported products. Also, Steel Ministry believes that inclusion of steel sector in this scheme may bring down products export price by up to 12%. Also, it will help domestic companies to make their products viable in global market.
Moving on, the upcoming railway budget will continue to focus on transformation of railways. ET now has learned from sources that budget will focus on railway stations redevelopment projects and introducing more of faster, safer and comfortable trains. My colleague Sameer Dikshit filed in this report earlier. Let's take a look.
The railways is going through a massive transformation, and sources have indicated that in the upcoming railway budget, some announcements are going to be made which will keep the momentum going. Sources have indicated that the focus will be on semi-high-speed mobility, and in the same direction, 100 to 120 new Vande Bharat trains are likely to be announced. Not just this, India's first sleeper-based Vande Bharat train is likely to be announced in the upcoming union budget, and it is also very possible that the first sleeper-based Vande Bharat train will run on tracks between New Delhi to a South India-based destination. In addition to this, 50 railway stations will be picked up for railway station redevelopment project, and the announcement is likely to be made in the budget. In addition to this, the safety is another important area, and Kavach, the safety mechanism for Indian Railways. So 1,000 kilometers of tracks will be brought under Kavach. Announcement could be made. Fencing. So to attain this semi-high-speed mobility, fencing of important corridors has to be done, and officially the project will be rolled out, and the announcement could be made in the budget. And a budgetary outlay of somewhere around 5,000 crore could be announced for this. So these are a couple of interesting announcements that we can see in the upcoming railway budget. But the larger focus is that the transformation through which railways is going, the momentum has to be kept on, and for the same, the budgetary allocation could be there, that could be more than 30% to what was announced for the last financial year 2021-22.
Finance Minister Nirmala Sitharaman's recovery is on track and she is expected to be discharged today. The 63-year-old was admitted to the hospital for a routine checkup and minor stomach infection on Monday. Now, she was admitted into a private ward of AIIMS, New Delhi.
And before we slip into a short break, let's quickly look at what is lined up for you on the next show, The Market. First up, we have Aman Choksi of Abacus Asset Manager, LLP, on his outlook for 2023. We have LV Prabhakar, MD and CEO, Canara Bank, on banks driving the growth. We also have MR Jaishankar from Brigade Enterprise on the real estate recovery. We have Rajana Nandan of Sequoia Capital on what's next for the startups. And finally, we have Atul Chaturvedi of Sri Renuka Sugars on the sugar sector being in a sweet spot. Welcome back. You're watching Market Cafe. Now, before we get on with the rest of the news, let's quickly mark the Asia markets. Now, Asia markets all seem to be in the red. Look at Nikkei. Nikkei is down almost more than 150 points. Shanghai is down 0.4%, and Kospi is down more than 2%. SGF Nifty, as you can see on your screen, is down 0.4%. All in the red. Futures, US futures seem flattish, hinting towards a more somber start for the Indian markets, as we can see. Now let's move on to the other news.
Well, we have Lisa joining us to give us all those stocks that would remain in focus on the back of news.
So the highlight today is the management change, which is reported by several companies, starting with Suryodaya Small Finance Bank. RBI has approved the reappointment of Bhaskar Babu Ramchandra as the MD and CEO for 3 years with effect from Jan 23, 2023. Ajit Kumar Saxena has been appointed as the chairman cum MD on the board of MOIL. Indostar Capital Finance has approved the appointment of Vinod Kumar Panikar as the CFO of the company with effect from 26 December, and HPCL Amit Garg has been appointed as the director effective from December 27th. On the other corporate announcements, we have Punjab and Sindh Bank, which will consider fundraising of up to 250 crore on 30th December. RVNL has received LOA for the appointment as the project implementation agency for UTF Harbour project in Maldives, which is a strategic project of the government, and the project is valued at around 1,544 odd crores. India Pesticides wholly owned subsidiary Shalvis Specialities has received environment clearance from the Ministry of Environment Forest for setting up their manufacturing plant, and BSE has also received final approval granted by SEBI for introducing a social stock exchange, which will be introduced as a separate segment on BSE. Well, on the corporate action, we have Technocraft Industries and TIPS it's the last day to buy the stocks to be eligible for buyback, and also the last day to buy Rajpalam Mills, which is eligible for the right issue of shares. So these are the stocks that will be in focus for today's session.
All right, thank you so much for that, Lisa. Do keep an eye out on all those stocks in today's trading session. Now, moving on, in a move to further intensify its presence in e-commerce, the Tatas are transferring the holding company of Tata Unistore to Tata Digital. Now, Tata Unistore owns and runs Tata Click. With this, Tata Digital becomes the sole entity for all the group online shopping ventures. Now, these ventures include Tata New, Big Basket and Chroma as well. As per latest regulatory filings, the Economic Times reported.
Well, along with this, Jubilant Pharmova would also remain in focus because on the back of the management meet. Now, in the management meet, the company has given detail about each and every segment of the company, and Vamakshi has gone through that report. Will be giving us the key highlights from those.
Well, absolutely. Good morning to both of you all. Let's look at what the management had to say in this meet. Now, Nirmal Bang caught up with the management, and they caught up with the management in order to get an overview of the current business environment as well as the growth opportunities in the company's different verticals. Now, let's first look at their radio pharma business. Now, that is back to pre-COVID levels, and in fact, it is expected to grow in double digits from FY24 onwards, and this is on the back of some new launches as well as the ramp up in Rubifil. The radio pharmacy business is the margin is also expected to improve from here on. In fact, it is expected to reach break even by the end of FY24 is what the management has indicated. Let's now move on to the allergy business. The management says that they continue to witness double-digit growth with healthy margins. As far as the generic business is concerned, that is facing some headwinds on account of steep pricing pressure, but the margin recovery is expected to kick in sequentially with product rationalization and new launches. CDMO sterile injectables business, well, owing to strong order book position and capacity addition, the CDMO sterile injectables business, the management is expected to see double-digit growth from FY24 onwards. So largely, when we look at what the management is saying, they're appearing to be quite positive, and in fact, they're appearing to be quite confident of posting double-digit growth across most of its businesses with improvement in profitability.
Thank you so much for that, Vamakshi. That was Jubilant for you. Now, let's quickly move on to Godrej Consumer Channel checks for Q3 FY23. What are the updates on their soap, household, insecticides and hair care segments? Let's bring in Lisa to give us more updates on that. Lisa, over to you.
Yes, so Phillip Capital has conducted a channel check which will give insights on Godrej Consumer's Q3 performance, starting with the soap segment that may see low single to mid single digit value growth, while decent offtake was seen in the volume growth. However, that has been offset by a price correction of around 12 to 15%. The market share gain story, however, continues for the soap segment. Moving on to the household insecticides, the demand remains weak across India except for the North India region, and North India region has seen strong growth because of the outbreak of dengue. And on their recently launched Goodnight Fast Car, they have been receiving mixed review for the same. Hair care is expected to clock around 15 to 20% revenue growth, while the air care segment is expected to see exponential growth owing to low base media campaigns and market share gains from Odonil. So on these lines, Godrej Consumer is expected to be in focus today.
Moving on, we have Vamakshi again to give us all the stocks that would remain in focus on the back of the brokerage notes that have come in the morning.
Well, absolutely. Let's first look at Page Industries. Now, we have a note that has come in from MK, and they're highlighting that growth expectations are well supported by the supply chain and distribution investments that the company has made. The women's segment should lead the growth going ahead, in their opinion, and the management remains confident of mid-teen growth beyond near-term challenges. So, on the back of that, MK has actually gone ahead and upgraded its rating on Page Industries from hold to buy, but nevertheless, they've cut their target price from 50,900 to 50,500. Chalet Hotel is the next one on our radar. We have a note coming in from Prabhudas Leeladhar, and they say that Chalet Hotel is a play on expected recovery in business travel. They believe that Chalet is best placed to ride the industry tailwinds. Chalet has the company also has plans to add nearly 88 rooms in Pune and 68 rooms in Hyderabad, and in fact they're expecting revenue to grow by 19% CAGR and PAT to grow by 68% CAGR from FY23 to FY25. So on the back of all those positive triggers, we have Prabhudas Leeladhar initiating coverage on Chalet Hotels. They've given a target price of 455 per share. And lastly, we will be watching out for the Realty Pack. Now we have a note that has come in from Morgan Stanley, and what they're highlighting is that the property cycle is remaining strong. Listed developers appear to be well prepared to take benefits with deep new launch pipelines. Balance sheets for all these developers have also been significantly repaired, and the valuations are also appearing to be above mean levels. So on the back of that, they're continuing to be overweight on DLF, Prestige and Sobha, while they're equal weight on Oberoi and Macrotech.
Well, thank you, Amakshi, for giving us all those details related to brokerages. Now, moving on, the QSR space that would remain in focus on the back of the Phillip Capital's channel check that they have done. Now, what is it suggesting? Now, the same-store sales growth are expected to remain weak in the third quarter of FY23, and this is despite the fact that Q3 had witnessed a heavy sporting season, and also the price hikes that were taken in the last 12 months were pretty much absorbed. But despite this, the same-store sales growth is expected to remain weak for most of the brands like KFC, Barbecue Nation, Pizza Hut and Domino's. Now, McDonald's, that is the Westlife company that manages the franchisee of McDonald's in South and West India. Now, that would be an exception in this pack, and the brokerage is expecting the SSG to be around 15% on the back of product portfolio expansion and their omni-channel capabilities. When it comes to margins, the gross margins for most of these QSR players are expected to remain under pressure owing to the sharp spike that we had seen in the raw material cost. Now, skim milk prices increased by around 30%. Similar hike was seen in liquid milk prices. Wheat prices increased by nearly 31% on a YY basis, while Brent crude also on a YY basis was higher by around 13%. And on the back of these higher raw material prices, the gross margins are expected to remain weak for all the QSR players. However, Westlife again would remain an exception on this front because of more contribution coming in from their high margin products like McCafe, and operating efficiencies are also expected to benefit the company. Now, because of this weak SSG and gross margins for other players coupled with accelerated store expansion, the EBITDA margin would also come under pressure, because if you know the new stores margins are always lower at the front end, and because of this the EBITDA margins would remain under pressure. Now, the brokerage is also suggesting reasons or giving out the reasons why the same store sales growth would be weak in the third quarter. Firstly, if you see reduction in new job creations, specifically coming in from the IT sector, and startup layoffs have also happened in the Q3. Along with this, a sharp increase that we have seen in home mortgage rates, that is the interest rates have gone up by around 150 to 200 basis points in the last 1 year, which has also led to a reduction in discretionary consumption, and lastly, easing of COVID-led pent-up demand. Now, these three factors could lead to a weak same-store sales growth for the QSR, with exceptions of McDonald's in the third quarter of FY23.
All right, that was the roundup on the QSR chains. Moving on, it was the year of consolidation, even between corporates, as players join hands to fight competition, consolidate market share and reject their corporate structure. My colleague Upasna joins in to tell us all about the M&A action in 2022.
2022 has been a great year in terms of M&A deals, and India has clearly outshined the global peers. Well, India stood out in terms of growth as compared to other countries, and structural reforms have largely aided the growth. Well, M&A touched almost $170 billion in 2022, accounting for almost 20% share in Asia Pac. M&A activity in India touched an all-time high of $148 billion in 9-month FY22, up almost about 58% on YoY basis. Well, before this, in 2018, India saw highest value of M&A deals, clocking at around $132 billion. Well, the year 2022 saw the busiest first 9 months ever. While talking about the sector-specific move, in terms of financial sector, it clocked almost the highest value in terms of deal value, while technology sector saw highest number of deals. Well, talking about the key triggers of growth going forward, buoyant cash reserves, increasing FDI inflows coupled with regulatory reforms and NCLT fast merger process are the key triggers leading to the sustained upward momentum. Well, now talking about some of the highest significant M&A deals in 2022, the merger of HDFC Limited and HDFC Bank tops the list. It is one of the biggest financial deals with a deal value of almost $40 billion. Well, in the IT space, LTI and Mindtree merger was one of a kind. And talking about the Tata Group consolidation, the merger of Air India and Vistara and joint venture between Tata Sons and Singapore International Airline was also one of a kind. Well, in the entertainment space, PVR and Inox merger took the entertainment ride forward. Well, Adani cemented its position by acquiring Ambuja Cements and ACC. Well, as we enter into 2023, the deal outlook remains cautious, slow and steady on the back of global sentiment and valuation reset.
Well, and as we wind up the 2022 in our ET Now year-end special, we caught up with the trailblazer of the year, Mahindra & Mahindra. Now, the stock is up more than 40%, bucking the overall trend in the sector. Listening to Rajesh Jejurikar, the Executive Director of M&M's Auto and Farm businesses, as he clarifies on their demerger plans.
One thing that the street is wondering, well, I must congratulate you. It's been a fantabulous year for M&M. The stock has given you a 45% return year to date. Is a demerger on the cards? Because there are many businesses which are under the M&M, listed entity.
Yeah, so actually, so firstly, there is no demerger on the cards. But the one thing that we are doing is we are spinning off the electric SUV business, and that's, as you know, recently got valued at $9 billion with BII bringing in some capital, and that's a new age business that we will of course grow because it's significant to us. The way we have been categorizing the group is to really break it into three sub-segments. There's what we call the core businesses, and there is a core auto, there's core FES, and then IT, which is Tech Mahindra, and then Mahindra Finance. So these become four core. All these numbers are clearly visible separately. And then we have growth gems, and then we have new age digital businesses. So in a way, we have three key segments. All the numbers are now visible separately. So you get a fair amount of transparency, and the attempt has been with every analyst meet to bring much greater transparency so people can interpret our performance very clearly segment by segment. The listed entity M&M Limited is primarily auto and farm. There's most of the other companies can be seen in a subsidiarized format separately and come into consolidated. But even the consolidated, we've broken up into these categorizations.
So let me get this right on record. No need for a demerger or no demerger?
No plans for a demerger.
No plan for a demerger. That's the word coming in from Mahindra & Mahindra. With that, we're completely out of time on this show, but you don't go anywhere. There's lots more action-packed stuff coming up for you on the market on the other side. Thank you so much for tuning in.